Welcome back to the show, listeners. Today, we're diving into the fascinating, sometimes confusing world of earnings calls. And to do that, we'll be playing the role of the earnings whisperer. Get it?
I like it.
Right.
Clever.
Yeah. So what company are we whispering about today?
Well, today's deep dive focuses on Best Buy's recent Q3. That's the third quarter of fiscal year 2025 earnings call.
Ah, Best Buy. The place where I go to browse and then buy everything online later.
Guilty as charged, too. But seriously, these calls are like a goldmine of information if you know how to sift through the jargon.
Definitely. For those who maybe don't tune into earnings calls every quarter, could you give a quick breakdown of what they even are?
Absolutely. In the simplest terms, it's basically a company's chance to tell the world, mainly investors, how they've been doing. They share their financial performance, the good, the bad, and the ugly.
Right. And maybe just as important, they talk about their plans for the future, which is always a little bit of, well, a guessing game. Oh, absolutely. Predicting the future is always risky business, but that's part of the fun, right?
Definitely keeps things interesting.
So, enough chit-chat. Let's jump into the numbers, shall we? Best Buy's revenue came in at $9.4 billion, a 2.9% dip compared to the same period last year. And EPS, that's earnings per share, also saw a decline, about 2%.
Right. Not the kind of growth investors typically cheer about, but like with any story, there's more than meets the eye.
Exactly. Raw numbers can be deceiving. So let's put on our earnings whisperer hats and dig a little deeper.
Absolutely. One of the first things I always look at is comparable sales. That basically helps us compare apples to apples, taking out any noise from things like new stores opening or closing.
That's a really important distinction because just looking at revenue alone doesn't tell you the whole story, right?
Exactly. And in this case, even though revenue is down, Best Buy actually managed to increase their gross margins.
Wait, hold on. Gross margins. I know we've got some listeners who are, let's say, not fluent in finance speak. Could you break that down for us?
Sure. Gross margin basically tells you how much profit a company makes on each dollar of sales after factoring in the cost of the goods sold.
Because like how much money they actually get to keep from each sale.
Precisely. And Best Buy managed to bump their gross margin up by 60 basis points, which might sound small, but it's significant.
Okay, back up a sec. Basis points.
Oh, right. Sorry. Finance people love their jargon. A basis point is just a fancy way of saying 1/100th of a percentage point.
Got it. So their margins went up by 0.6%, which is more than a rounding error, for sure.
Right. And this tells us they're getting better at making money, even if they're selling a little less.
So they're getting smarter about what they sell and how they sell it. What's the magic formula here?
One key factor is their focus on membership programs and services. Those tend to be higher margin offerings.
Ah, the classic recurring revenue strategy. Make the customer happy, keep him coming back for more. Smart move.
Definitely. Now, let's look at which products are driving these results. One interesting trend was a surge in computing and tablet sales, particularly laptops, which were up 7%.
Laptops. Interesting. You'd think with everyone back in the office that demand would have slowed down, wouldn't you?
You would think so. But maybe folks are finally upgrading those old machines after years of putting it off.
Or maybe, hear me out, maybe those old laptops just can't handle all the latest software and streaming and stuff.
You might be onto something there. The demands on our devices just keep growing, so it makes sense that people would need to upgrade more frequently.
Right. Makes you wonder what the lifespan of a laptop even is these days.
It's definitely not the 10 years it used to be.
Not even close. Okay, so computers and tablets are booming, but I'm guessing not all categories were so lucky.
Right. Gaming, home theater, and appliances actually saw declines. This could be a sign that consumers are pulling back a bit on those bigger ticket, more discretionary items.
The economy, right. It's been a bit of a roller coaster lately.
Exactly. And when people feel uncertain, they tend to hold off on those big purchases. Makes sense.
Makes perfect sense. Now, can't talk about Best Buy without addressing the, shall we say, the elephant in the room, online sales. I mean, who even goes to brick and mortar stores anymore?
Well, more people than you might think. But you're right, online sales are a huge part of the equation. Best Buy raked in $2.7 billion from online sales this quarter.
Wow, 2.7 billion. That's a significant chunk of change.
It is, and that represents about 31% of their total domestic revenue.
That's pretty impressive. It seems they've managed to adapt to the whole e-commerce thing pretty well.
They have, and what's interesting is the growing popularity of the buy online, pick up in-store option.
Ah, the best of both worlds. You get the convenience of online shopping, but you can still, see the product in person before you commit.
Exactly. And for a company like Best Buy, that's a huge advantage. It gets people into the stores where they might end up buying even more.
Clever. Speaking of the future, what's Best Buy's outlook? Are they feeling optimistic or battening down the hatches?
Well, they've adjusted their Q4 comparable sales outlook. They're now projecting flat to -3% growth, which, isn't exactly setting the world on fire.
Yeah, a bit cautious, you might say. But it's also the holiday season, right? The time when retailers traditionally make a big push.
Absolutely, and they're not shying away from that. They're planning early Black Friday promotions. They're rolling out AI-powered gift-finding tools to help shoppers make those tough choices.
Oh, I love those AI gift guides. They really can be helpful when you're totally stumped.
Right. And they're focusing on premium products for those shoppers who are, willing to splurge a little.
Makes sense. Got to cater to all segments of the market.
hmm
But beyond the holiday season, what are their long-term plans?
Well, they're making some interesting moves. They're experimenting with smaller store formats and expanding their outlet presence.
Smaller stores.
Yeah.
Interesting. Is that like a response to rising rents or something?
It could be. But it also reflects the fact that shopping habits are changing. People are looking for more convenience, more curated experiences.
Makes sense. Nobody wants to spend hours wandering around a giant store anymore.
Exactly. So they're adapting to that.
Smart move. But
Okay.
it's not all sunshine and rainbows, right? What are the analysts, the whisperers, so to speak, concerned about?
They have some valid points. One concern is the softer than expected demand in some key categories, which, we haven't named specifically, but it's something to watch.
Right. Makes you wonder, what are those categories? Maybe they'll drop some hints in the next earnings call.
Hopefully. Another concern is the broader economic uncertainty. That's making a lot of consumers hesitate, especially when it comes to those big ticket items.
Yeah, that makes sense. And doesn't all this heavy reliance on promotions also pose a risk?
It definitely does. Too much discounting can hurt their brand image and ultimately their profitability. It's a balancing act.
So how are they planning to navigate all these challenges?
They're really doubling down on operational efficiency. They're investing heavily in AI and automation, streamlining everything from inventory management to pricing strategies.
Working smarter, not harder, as they say.
Exactly. And they're not forgetting about their employees. They're investing in their workforce, making sure they have the right people with the right skills and the right roles.
Which is crucial in today's tight labor market.
Absolutely.
Now let's shift gears a bit. Best Buy is more than just numbers on a balance sheet, right? They're a brand, an experience. What's happening on that front?
Well, they recently launched a refreshed brand identity. The new tagline is "Imagine That."
Imagine that. Kind of catchy. What's the message behind it?
They're trying to reposition themselves as a company that's all about innovation, creativity, and those wow factor customer experiences.
Makes sense. They need to stand out in a crowded market.
Exactly. And one final thing worth noting is their partnership with Bell Canada.
Oh, yeah. What's the latest there?
They've been very successful in rebranding and operating 167 small format stores across Canada.
So leveraging an existing network and customer base.
Clever move.
Well, folks, there you have it. Our deep dive into Best Buy's recent earnings call. We've decoded the numbers, explored the challenges, and peeked into their strategic vision for the future.
It's a reminder that even in today's rapidly changing retail environment, companies like Best Buy are finding ways to adapt and innovate.
Exactly. And that's what makes it so exciting. We're curious to hear your thoughts. How do you think Best Buy is positioned for the future? What strategies do you find most compelling or, completely bonkers? Hit us up on social media and let's continue this conversation.
Always love to hear what our listeners think.
Until next time.